It's Marshall Tingle with your Superior Ag Insurance Weekly Review for this past week, the week of February 22nd. Now, there's only one way that you can describe this past week, and that's just been wild and volatile, almost like a roller coaster with highs and lows and dips and valleys. There's just so much going on in the world around us, especially with this Russia-Ukraine conflict that really took a more drastic effect there Wednesday and Thursday, and it's had a huge impact on our market. So let's get right into business. So let's talk about your corn market. All of your grains had a wild week. Now, the USDA Ag Outline was released this past week, and it came out to be slightly bearish, with your new crop corn expecting 92 million acres to be planted and a trend line yield of 181 bushels an acre. Now, most of your traders seem pretty skeptical of that high of a yield, but it seems like that along with some end-of-the-week profit taking, there was a slight decline in your new crop corn. So your May contract started off the week at $6.56 a bushel. They closed the week at $6.55 3/4 and finished off with a high of $7.16 a bushel. Now your December contract corn started off the week at $5.99 a bushel. It finished out the week at $5.79 3/4 a bushel, and you had a weekly high of $6.46 a bushel. Now let's move to your soybeans. Your USDA is forecasting that your U.S. new crop planted acres to be 88 million this year versus the 87.2 million of last year. The total U.S. soybean production is projected at 4.5 billion bushels. Now that's going to be 1% above last year, and the highest planted acres and an average yield forecast of 51.5 bushels an acre. Your soybean exports for the 2022-2023 years are projected at 2.15 billion bushels. That's up 100 million from the 21-22 forecast. The U.S. exports are expected to be relatively strong through the first half of the marketing year, with the current drought in South America limiting their exportable supplies this fall. However, the USDA says that with a higher South American harvest expected in early 2023, the export competition in the second half of the marketing year will likely limit additional U.S. gains. Now, your soybean contracts. Soybean contracts for May started off the week at $16.10 a bushel, finished out the week at $15.84.5, and you had a weekly high of $17.59 a bushel. Now, your November contracts, you look to start off the week at $14.64 a bushel, and they finished off the week at $14.15 a bushel, and you had a weekly high of $15.55. Now, this Russia-Ukraine deal has really had an impact on your cattle market. Both your feeder cattle and your fat cattle have taken a huge hit, both on the cash and on the board both. I mean, it's had a really drastic effect on it. Now, the biggest difference is, and I guess this is kind of a positive note, is the biggest hits have been right here in these close months to us. Your back months have not seen that much of a hit, but there has been a hit taken. And your box beef cutouts have taken a big hit this week as well. But let's get right into it now. Your April live cattle contracts started off the week at $145.70, and we finished out the week at $141.92.5. Now move on down to your June contracts. Our June contract started off at $141, and that's going to be $141.375, and then they finished off the week at $137.90. Now your back months didn't lose as much. You're looking at $1.50 to $2 on your back months. Now your feeder cattle, we all know what it's done. It's taken a major hit all the way across the board, but your cattle on feed report did come out this past Friday. Now, your cattle on feed report was going to be pretty much neutral for the week. So this is going to be based on all of your feedlots with 1,000 head or more. Total head on feed right now is 12.2 million head as of February 1st of 22. Now this inventory was 1% above your February 1st of 2021 and makes this the highest February 1st inventory since the series began back in 96. Now your placement in your feedlots during the January total 2 million head. That's going to be 1% below 2021. Net placements on these cattle were 1.94 million head, and during January, the placements of cattle and calves weighing less than 600 pounds was 420,000 head. Your 600 to 699 pounds were 445,000 head. Your 7 weights, your 700 to 799 pound cattle, 545,000 head. Your 8 to 899 100 pound calves were going to be 414,000 head. Your 900 to 999 pound calves, you're looking at 105,000 head. Your big 1,000-pound cattle, 1,000 pounds and greater, were 70,000 head. Now, your marketing of your fed cattle during January total to be 1.77 million, and that's going to be 3% below 2021. Now, your other disappearances total to 64,000 head during the week, or excuse me, during January, and that's 14% above your 2021. Now, this was, like I said, pretty much right in line with their estimates. They didn't expect to see much change in live cattle futures come this Monday, but your biggest placements are going to be for your cattle deliveries in May and June, just as the past 3 months have shown. Now, your slaughter now through March will be some of the lightest for 2022, and that should have been expected just because your late October through present heavy feeders have been hard to find. If pastures don't improve, there could be bigger placements for your summer, and that's going to be swelling to the 420,000 head right now that are weighing your 600 pounds. Now, this past week, packers have pushed slaughter Monday through Thursday, but backed off on the back half of the week on Friday and Saturday. Total kill for the week was 647,000 compared to the 660,000 of last week. Now, lower beef prices could begin to have more impact on your cattle on feed report. Now, your box beef cutouts did take a big hit. Your choice composite prices from a week ago were down $6.08. Your select prices were down $6.90, and your choice primal cuts they lost $14.67. And it's just pretty much because your consumers aren't buying this high-priced beef. Normally, when beef prices are down in February, then normally your beef prices are down in February, but your beef prices begin to rise in spring. But your consumers are fighting inflation. Nobody wants to pay for a high-priced piece of beef in your stores. And you're going to have a whole lot of other impacts going in on this with your high fuel prices and your other prices that are inflated across pretty much across the board and across everything that your consumer is going to purchase. So that's pretty much your week in review for this past week, the week of February 22nd. Thank you so much. If you have any questions, feel free to reach out to us. Superior Ag Insurance. Call Ian Thomas at 859-613-2453 or call Damon Reed at 859-200-9188 or reach out to us on the World Wide Web. Check our website out, www.superioragins.com. Keep up with us here on YouTube and Facebook. If you have any questions for us or anything we can do to help you, we'd love to help you out.